Japan JPX plans a 2027 crypto ETF debut, but the schedule depends on unfinished legal and tax reform. That makes the story less about a guaranteed launch and more about whether Japan can create the framework that makes one possible. Japan Exchange Group is building crypto ETF development into its roadmap, while policymakers refine how digital assets fit into securities and taxation rules. For investors, the key point is that a target year is not the same thing as an approved product. The immediate pressure is that the target depends on legal and tax rules still being completed. The reason this deserves attention is that a target year is not product approval. Read the event through this lens. JPX is targeting 2027 for crypto ETF development. The confirmed baseline is a 2027 target for cryptocurrency ETF offerings if regulatory modernization is completed. The Financial Instruments and Exchange Act framework is central because ETF products need digital assets to fit securities-style oversight. Tax treatment is also unresolved, and the timing of that decision can affect when products become available. JPX has tied the plan to broader portfolio diversification beyond conventional stock listings and futures contracts. Those facts put fIEA treatment is central to the ETF framework. Beside tax policy remains a timing factor. That baseline keeps the segment grounded before the mechanism takes over. The factual floor is JPX wants crypto ETFs inside its market roadmap. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is market structure permission. An exchange cannot simply list a crypto ETF because demand exists. It needs legal classification, supervision, operational readiness, and tax clarity. In plain English, the product lives or dies on the rulebook before any trading screen matters. Japan JPX Plans matters here because institutional demand can push the project forward, but policy completion decides the launch window. The operating detail is that classification decides whether funds can be structured, while tax clarity affects market availability. That is the part viewers need before judging the headline. The mechanism stays concrete because crypto ETFs need securities-style permission before listing. The affected side is Japanese investors and asset managers seeking a familiar, exchange-listed route to crypto exposure. A domestic ETF would offer regulated access through traditional market infrastructure instead of requiring direct token handling. That could deepen participation, but it also moves crypto into a stricter oversight environment. No specific assets, fund structures, fees, or listing details are confirmed, so the market should not treat the roadmap as a product sheet. The practical effect lands on Japanese investors and issuers because asset managers may get a familiar product wrapper. The secondary read is that oversight would likely be stricter than direct trading. The effect is not abstract. Japanese investors and issuers could gain a regulated exchange-listed route. The open question is whether the legal and tax pieces finish in time for 2027. The schedule remains adaptable because legislative processes and government policy can move slowly. The useful proof would be finalized reforms, product filings, and clear exchange listing standards. The target does not prove that a Bitcoin, Ethereum, or multi-asset ETF is already approved. The clean split is that the 2027 target is stated. While final rule completion still needs evidence, the unsupported leap would be this: no product structure has been confirmed. The clarification needed is final reforms and filings would clarify the path. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is Japan's final regulatory and tax treatment for crypto ETFs. For Japan JPX Plans, the watch item is not a price move. It is the legal pathway that lets funds exist on the exchange. Once that pathway is settled, product issuers can move from interest to filings. Until then, 2027 is a planning horizon, not a confirmed launch date. The decisive test is watch fIEA and tax decisions. That matters because rules decide whether ETFs can list. The next stage should be judged by regulatory and tax finalization, not by guesses.